with us now is Andrew Cochran, the chairman of Hague and London Oil, which is a fairly new company. So thank you for joining us.
Thank you for inviting me.
Tell us a little bit about Halo.
Halo is a private company formed probably about a year ago. Or actually me, purchased 15% interest in an undeveloped oil discovery in the Philippines. That was a private entity called Hague and London Oil BV, which we subsequently sold to a company called Wessex Exploration, which is listed on the London Stock Exchange with interests in South America, Africa, and actually the UK. And we effectively reversed into Wessex, who acquired Hague and London Oil just before Christmas. We changed the name. We did a share consolidation. There was about 1 billion shares outstanding. Wessex, we did a 41 consolidation, changed the ticker symbol, and virtually all members of the Wessex staff are now gone. So it is Halo.
It's a completely different company.
Completely different company. The people I'm working with, we had planned to start another company. We sold, me and the people I'm working with were at Coastal Energy, which sold just about a year ago in a $2.5 billion transaction to Cepsa. We had wanted a public entity. We did not want to be reliant on an initial public offering. Just in my working life, we've seen that markets are fickle. Timing is everything. And we saw an interesting opportunity with Wessex and took it to so we quietly brought Hague and London Oil to market. Just since the new year, frankly, we've been looking aggressively for new ventures. And
what are you finding so far, or where are you looking?
Our focus is basically anywhere in the existing portfolio, and that is South America, Africa, or Asia. We seem as fair game, so very much focused on emerging markets. And then within that, we'd probably like to dwell on places that we have hands-on experience. So for me, it's Africa, and from my time at Dominion Oil, which was a company we'd sold to Ophir about, I guess, wow, it's probably 3 years ago now. And Asia is a core focus area for us. As I told you, Hague and London Oil started with an acquisition in the Philippines. I myself was a founder of, or I guess I still am, a founder of Salamander Energy, and was an executive director of Coastal Energy. Both companies were very much focused on Southeast Asia. So these are regimes that we're very comfortable in working in. And fundamentally, Asia is a great place to market your hydrocarbons. If I contrast that with my experiences at Dominion in Africa, you see, in Africa you can find large quantities of hydrocarbons, particularly gas, but finding a market for that can actually be quite difficult. I've seen cases where you can find multiple companies that have many TCF of gas that have yet to be monetized. In Asia, because you have quite robust and relatively mature economies, much smaller quantities of natural gas or even oil will be commercial. The countries fundamentally need the hydrocarbons, and also semi-anomalous for the emerging markets, these countries also tend to be quite well integrated in terms of energy. Something else you find in Africa, rarely do you see countries, infrastructures merged across international frontiers, and here you can put multiple areas where there is cross-border trade in hydrocarbons. Thailand with Malaysia, Thailand with Myanmar, Singapore with Indonesia. So it's a good place to market your hydrocarbons.
Well interconnected, good infrastructure,
and
good demand.
Pricing.
Yeah.
Domestic prices in some of these countries are anywhere from 50 to 100% of what the Henry Hub is trading at in the United States right now.
A lot of the people that we've been speaking to, I've been asking them how the low oil price is changing their strategy, but you launched when prices were low, so you got in at a very difficult time.
Difficult, yes and no, because we're relatively blank sheet of paper. Yes, we do have a portfolio, it's exploration, but we have, within the current portfolio that I described, our capital commitments are pretty much zero. I think our capital budget for the year is maybe $200,000. So while we have a portfolio of opportunities, we're not committed to spending on it. So, and without reserves or production, well, granted, we'd love to have cash flow. We understand that the value of the company would be linked to oil and would have gone down. So no, on the contrary, this has been intentional, and we've ramped up our efforts because we see a lot of opportunity. funding could be difficult. And so some subtle changes for us is we've begun to focus more on natural gas than oil, mainly due to volatility. Not so much the oil price, because we're a buyer, it's the volatility. We still see a wide spread between how we might value something and how a vendor may. But particularly fixed term natural gas, it's unambiguous. So we are shifting our current business development efforts to gas, but again, not exclusively.
Do you anticipate oil prices to plateau and recover this year, or is that a longer term prospect in your mind?
I think they have to stabilize. I guess the equivalent to use the term plateau. And I think that's what a lot of people are waiting for. We obviously want a higher oil price, but fundamentally what the industry wants is a stable oil price. Okay, if it's $40 a barrel, then we will learn to live within $40 a barrel. If it's $60 a barrel, we will learn to live within $60 a barrel. And costs will come down accordingly. So yeah, I would expect it to. I'm not an expert on oil price, but people that know more about it than I say this is not currently driven by fundamentals. There is an oversupply, but there is still growth. China their consumption is still growing by 3% this year. So we see there is that if people stop reinvesting in the industry, and perhaps that's what OPEC is seeking, that you will see prices rise naturally. But a 50% fall in oil price was not generated by a 50% drop in demand. So we would expect it to be, there has to be some stability at some point, and then people can make large capital decisions again.
A lot of people are talking about the oil price, but are there other challenges for the industry right now besides that?
Well, it's linked, but cost. One of the problems, and this seems to be, OPEC members have said as much, let the lowest cost producer win effectively. And that's one of the challenges, particularly in places like the North Sea. The costs have been very high, and people had sanctioned projects that needed $80 a barrel to work. Now, with costs coming down, which they will, then you can see a rebalancing in some of these projects. So it's not just a factor of oil price, but also, I think, a factor of cost. So again, we think our timing is good because we hope to be able to catch the wave of opportunity and low cost.
Where are the opportunities in Asia specifically?
Everywhere. An area we particularly like, I've lived there, Indonesia, and because they've been trying to shift the economy more towards domestic natural gas production. So the government is actively trying to get more fields developed. The new president, Joko, seems to be not only saying good things for the industry, but by action. Just last week, or maybe it was this week, they announced that they had dropped a very unpopular program called the land and building tax, where provinces were charging operators of acreage on a per square kilometer basis, even if you're offshore. The land and building tax. But that's dropped. So I say not only is the current president saying things, but they're actually doing it. So Indonesia looks like a place that we'd like to be. I mean, whether or not we can find the right opportunity, I can't say, but it is some place that we would certainly spend a lot of time and effort on.
Are you looking at going in with partners, maybe doing some acquisitions? How would you get into that?
All of the above. Again, from the time of having lived in Indonesia, it's a place we're comfortable working. So we could do it on our own. I think ultimately we would prefer to work with partners, but whether we do that day one or day 2 or day 8, I don't know.
You've come a long way to be at this Oil Council conference. So well, you were just in Jakarta, but you don't live in this region, currently, anyway. That could change, you never know. So why is it worth it for you to be here in this location talking to the people here?
What we find about these events, and Oil Council in particular, is it's a great nexus of people, both industry, finance, and service providers. And if I'm going to fly from Holland to Asia, I could try to set up 8 meetings and spend a week here. Or frankly, I could come spend a day at this event and meet basically the same people. Maybe you don't have the privacy, but also in this part of the world, realize face-to-face interaction is quite important. You re-engage with people you haven't seen for a few years, and then that phone call next week is just a lot more comfortable. Yeah. So that's what we find valuable.
Give me the view from Europe. What are people talking about in Europe about Asia? Does everybody want to be here, or do they find enough projects in Europe?
This time of year, everybody wants to be there. In London, and Hague and London, the weather is cold and wet. So quite literally, everybody I know would rather be here than there. But I think generally speaking, if you're asking about investment, yes, part of the reason uniquely there because costs in the North Sea were really quite high, and we were needing high oil price. As I told you, here you don't necessarily need that. Costs have never been quite at North Sea levels, and smaller fields may be commercial here. So yes, I think people are looking more towards emerging markets, and Southeast Asia looks very appealing for the reasons I said, that you've got some integrated economies and very energy hungry. And financeable. Political risk is considered very low.
Is it? In
Southeast Asia. Yeah, virtually every country, virtually every ASEAN country that we might invest in, I believe, political risk is considered very, very low.
That's interesting, because there have been, there's coups happen here time to time. And
they do, but we coastal. The bulk of the company's value was in Thailand, and it did never, a military coup there never affected our valuation. Oddly enough, because of the political issues at the time, more or less chronic political issues in Thailand, that coup actually brought stability. I think people perceived political risk actually went down, at least in the ability for somebody to execute a business plan in the country, because after the coup, the government was then again responsive. There was more or less paralysis, which is why I can't guess why the military did what they did, but I assume that must have been a factor, that freed up the paralysis. So I think that actually, funny enough, may have reduced political risk. And we don't see elements of natural resource nationalism as you have in some other countries, like Venezuela. For example, people may say some things occasionally, but we've never seen any large-scale appropriations or anything that we've deemed to be really extra contractual.
Okay. We've got to keep your eye on a lot of things here.
We do, but fundamentally, it looks to be a good place to invest. I said we wouldn't be exclusive to Asia, but Halo's a new company, and it's a great time to try to expand, assuming the funding is available.
Okay, lots of opportunity. Well, thank you very much for coming in to talk to us about it.
Okay.
We've been speaking with Andrew Cochran. He's the chairman of Hague and London Oil.